Happy Friday and welcome again to another exciting episode of Crypto Espresso, your teeny tiny daily shot of caffeinated crypto headlines. I'm your host Andrew, and there's a giant crane outside of my window today. Any loud beeping or metallic noise is the fault of the crane. I am not turning into a cyborg. First up, a former Coinbase employee has been charged with insider trading of cryptocurrencies. It's alleged Ishan Wahi was involved in the highly confidential process of deciding which coins would be listed on the exchange and when. Prosecutors claim he shared secret information with his brother and a business associate who ended up making $1.5 million in gains by trading 25 cryptocurrencies. All three men could face 20 years behind bars if convicted. U.S. Attorney General Damian Williams said this is the first insider trading case involving crypto markets, adding, "Today's charges are a further reminder that Web3 is not a law-free zone." The Securities and Exchange Commission also brought charges over this case, but there's a particular line in the court filing which has caused alarm bells. According to the SEC, at least 9 digital assets listed on Coinbase are securities. The agency explained that these altcoins contain the hallmarks of the definition of a security. Coinbase has shot back by saying none of the assets listed on its trading platform are securities, adding, "The SEC charges are an unfortunate distraction from today's appropriate law enforcement action." Michael Saylor has lashed out at Tesla for selling 75% of its Bitcoin. The MicroStrategy CEO has long been one of the most bullish voices in the crypto space, indicating he's pretty exasperated about Elon Musk's decision to offload his crypto investment. Saylor flexed his mathematical knowledge, writing, "If you sell 75% of your Bitcoin, you will only have 25% of your Bitcoin left." It's fair to say that MicroStrategy has taken a very different approach compared to Tesla when it comes to acquiring Bitcoin. The business intelligence firm has actively taken on additional levels of debt to ensure it can get its hands on even more of the cryptocurrency. And finally, a man has been convicted over a scheme to defraud investors by marketing and selling a fraudulent cryptocurrency. Randall Crater was the creator of MyBigCoin, which was offered to the public from 2014 to 2017. Prosecutors say he had inaccurately suggested this asset was backed by $300 million of gold, oil, and other commodities. His company had also falsely claimed to have partnerships with MasterCard. But all of this was a lie, and according to the U.S. Justice Department, Crater misappropriated $6 million of investor funds, spending hundreds of thousands of dollars on antiques, art, and jewelry. Crater will be sentenced on October 27th, and he faces decades in jail. But investors, get in on this. It's my big spiel of engagement. Like this video, subscribe to our YouTube channel, and click on that little bell icon to get buzzed whenever a new Crypto Espresso video goes live. Alex also has a big spiel of their own. Ask Alex in the description below if you have any questions about our stories or crypto in general. Alex is also a great source of info for all things Web3 and that kooky metaverse thing that Mark Zuckerberg is gaga over. And with that, these have been your headlines, and once again, I've been your host Andrew, and ladies and gentlemen, the weekend. We'll see you Monday.